While some online bullion dealers continue to charge $4 over spot for US Mint Silver Eagles, SD Bullion is selling 2016 Silver Eagles for just $2.29 over spot for any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined over 25,000 new customers by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today is our good friend and fund manager Dave Kranzler over in Denver. How's the weather out in Denver today, Dave?
Well, it's good right now. Every afternoon we're getting hammered with intense thunderstorms. It's monsoon season here, so
yeah, it'll be time for the ski slopes soon enough here. We'll make a trip to visit you.
Let's not make any rushes there yet. I'm still not ready for summer to be over.
Well, I don't think gold and silver are ready for summer to be over quite yet either, Dave. It's been a big summer for gold and silver. We've had a bit of a correction here over the past week and a half, which really was almost a little bit overdue. It's a little bit healthier, in my opinion, to have a little bit of pullback and some consolidation so we can move on to new levels from a little bit better of a base. So what's your take here on the trading really over the last week or two, and then more of a broader outlook going forward here in the second half?
Sure. I'll reference a couple numbers. I'll use silver as the example. I think what happens is I think people in our market I think they get sort of the expectation built in that this market's just it's gonna go up nonstop, or and if it sells off a little bit, it's manipulation. But I mean, I'm looking at the price of silver here, and it's up 23% since the beginning of June. So it's like, I mean, how much do you want? I mean, the 23% run in the S&P, and they'd be doing naked cartwheels on CNBC and Fox Business, in that short a period of time, right? So I think part of it is we're kind of, as everyone knows, I'm sure all your listeners are aware, it's a little bit of a seasonal lull period for the Eastern Hemisphere buying countries, except for China, apparently. India's been out of the equation since early March for at least gold, although I have seen some articles, and they don't ever make it into much exposure over here in the mainstream or the alternative, that India's been going crazy with buying silver. So how much of that is true or not, I don't know. But that may be part of what is sort of the invisible hand underneath the silver market. I mean, what it seems to me is that I think the paper manipulators haven't lost complete control, but I think they lose a little bit more control almost every day, and you can see that in the amount of COMEX paper they're throwing at the market. I mean, you've got, record and near record levels of open interest in gold and silver for the better part of the last 2 or 3 weeks. And the last time we saw open interest levels this high, gold was about ready to go through 1900, and silver was about ready to go through 50. So it kind of gives you an idea of how much paper they have to throw at the market right now on a relative basis just to keep gold and silver from going parabolic. And I actually look at the manipulation to the extent that it's working. I look at it as an opportunity to keep accumulating cheap physical gold and silver. So every time they hit the market, I'm in some way trying to buy some gold or silver. So this week, every morning, I have a BitGold account. Wake up, gold's down, and I move money into the BitGold account. I move it out. I move my fiat electronic credits into BitGold, where I'm actually buying gold grams, physical gold grams, that I can take delivery of if I want. So I think, the seasonal lull we're in is kind of historically been from, say, mid-July to mid to late August. But, you know, and then what happens is you start getting the seasonal festival and holiday celebrations over in these Eastern Hemisphere countries that start picking up again. And that's when they start buying a lot of gold and silver. And I don't know what's going to happen with India, because India has been kind of an enigma since March in terms of, you know, they haven't been importing gold. But so I'm assuming there's a lot being smuggled into India. But I know historically, and again, these are just really rough numbers, so don't hold me to them, but I would say historically India has imported probably more than a third of the amount of gold that it imports in a year in the last few months of the year. So, yeah, I mean, if India's appetite wakes up, I mean, this market could really get explosive to the upside. And I don't even think we need India to wake up for us to have a really good move in, you know, as summer closes out. So I wrote a blog post, I think it was yesterday or maybe the day before, and I said, you know, this isn't a prediction, or I might have stuck it in my mining stock journal. I can't remember now. I've been writing so much lately, but I just said this isn't a hard prediction, so don't hold me to it, but I would not be surprised to see gold at 1,500 by the end of September or October. And the gold-silver ratio right now is about 66. If we get a move like that in gold, you're probably going to see the gold-silver ratio decline down to about 60. So that would put gold theoretically at 25. Now, that's a huge move. But I don't, and you know, again, I'm not saying that's my prediction, but you know, it wouldn't surprise me if we see those numbers by the end of September or October.
So with that in mind, Dave, a lot of the stocks that you picked in your mining stock journal have been up just massive amounts here in 2016. What's your outlook right now in this little bit of a pullback? Is this a time to be getting your foot in the water with some mining shares as well? What's your outlook on the shares right now?
I think it kind of depends on what your positions are. You know, if you have what you think are full positions, I would just hold and let it ride. If you're looking to accumulate, again, I just think with as manipulated as this market is, I think it's impossible to try and time the market. You know, you might get lucky, you know, once in a while and time it 2 out of 5 times or one out of 5 times, you know, but then the next 5 times you'll probably miss it every time. So I think if you don't own anything, I think you start buying here and, you know, just buy a third of what you ultimately want to hold and wait and see if we get a correction or a sell-off. But I think we're in the mode now where you want to buy any sell-off or add to your positions if you're looking to add to the sector, to your portfolio. So, I mean, this is what I have in my portfolio of mining stocks. And I actually have had some subscribers ask me recently if I was going to issue sell recommendations, and I was like, you don't want to sell these stocks. I mean, yeah. I'll let you know if something material changes at one of these companies that I think will make it not work out. But you don't want to sell these because, first of all, they're extraordinarily undervalued as they are right now, especially with where the price of gold and silver is. But imagine if, you know, eventually we're going to get a move in gold over 2,000. So then imagine what these stocks are worth. And if you sell them now, you're going to miss out on that. Or if you sell them in a couple months, you're going to miss out on that. So I guess the short answer is, yeah, if you don't own any, start buying. And if you do own them, add them on every pullback.
Yeah, and the thing with the cartel capping our markets, yesterday's a great example of a beautiful upside reversal. I mean, the buyers are still here. We have intact this thesis for the mega bull market ongoing with negative interest rates everywhere, with the Bank of Japan going absolutely bonkers with their monetary policy, and on and on and on. The equity markets are responding to this monetary expansion, and that's why we're seeing this counterintuitive move of the general market stocks making new highs, while the economy is sputtering along, and everywhere we look when it comes to consumer activity, 70 some odd percent of the United States economy. All indications are that the consumer is tapped out and is rolling over. So we've been able to move through this summer doldrums period and maintain these higher levels that are post-Brexit levels without losing a lot of ground, and that's actually pretty impressive considering what's been going on. And even the dollar has been a headwind this week. It's now hitting 4-month highs on the DX supply index. So all told, that and the constant powers that be leaning on precious metals, all told, is still nonetheless pretty impressive that we've been able to stabilize here now at $19.50 some odd cents, with silver and gold kind of stabilized as well. We'll see where things go. We're recording at about 1:30 Eastern time on Friday. We got a few hours left in the market. But there's been a lot of fireworks this week, and all through the action, we're still moving higher. After yesterday's decline, so that's a positive pattern.
Listeners, a quick update on what we've been seeing in the physical gold and silver markets here at a retail and wholesale level in the U.S. over the past week. Demand continues to be extraordinarily strong. We've seen a big money coming back onto the scene here with the dip over the past week, especially in some of the products with lower premium on the silver side. We had a single customer take down, I think, over 30,000, face value of 90%. We've had single customers taking down 10, 20, 30,000 silver eagles at a time. So demand continues to be strong, but it's again, right now there's enough coins in the market that premiums are still near low levels. So it's a good time for investors as far as premium-wise, as coins aren't expensive premium-wise due to a shortage in the market. So there's a sufficient supply in the market to meet the current demand, as elevated as that is. So, and again, on Monday, the Mint actually, for those who didn't catch the news, this past Monday, the U.S. Mint announced the end of Silver Eagle allocations. Silver Eagles had been allocated for the entirety of 2016, and really ever since they came back on for sale last July, after the Mint had suspended sales for a month in the wake of the Greek crisis and the panic into gold and silver coins back then. So really it had been about 13 months since unlimited purchases of Silver Eagle coins was allowed by the U.S. Mint. The purchases this week actually were a little bit lower than I would have anticipated in the wake of that. About 500,000 coins this week, bringing year-to-date sales to right around 27.5 million here in the third week of July. So while sales have declined a bit over the toward pace in earlier years, we're still on pace for an all-time record sales number. I mean, I'm sure you guys remember it's only a couple of years ago that 27 million coins would have set an all-time record for the entire year, guys.
It doesn't surprise me. I mean, haven't we been hitting record sales every year for the last several years?
Yeah, we'd be on pace for, I believe, off the top of my head, the third year in the row here this year. So. Yeah.
I think that's awesome. I mean, especially when you consider, just on a macro basis, the real disposable income for the median household is declining. So to me, it probably means that you're getting, it's not the same people buying, stepping up their buying. I think you're getting a wider audience involved, don't you think?
Yeah, it certainly seems like that. We've seen a large influx of brand new buyers to physical gold and silver here over the last 6 months, so I'm sure industry-wide. Just look at searches on the internet for buying gold, buying silver, and coins. There's been a huge uptick in searches for those types of things, which is definitely a good sign, especially after the terrible sentiment the sector had about 6 or 7 months ago, the end of 2015.
Yeah, I think with all the fraud going on, the obvious political corruption, I think more and more people are looking at the stock market and just saying, no way, there's no way that's for real. Yeah. And I think the public's kind of sensing sort of a desperation on the sense of the policymakers, and especially the Fed. And I think they're starting to rethink whether whether or not they should own precious metals. And I think that's probably part of what we're seeing.
Well, by and large, we haven't seen a huge change in the understanding of precious metals in the North American market. I mean, as Bill Murphy always jokes, most Americans can't even spell gold. And that's still the case. I mean, we're still talking about a really small percentage of people that are participating. But what's really interesting is that if you look at, like, for example, mutual fund redemptions, we've been running at record levels, and something like $40 billion worth of redemptions have been happening on a monthly basis. And that's a lot of money coming out of the stock market, and we've seen index funds partially making up some of that, but that is likely central bank buying. That's also incorporating, the flight to quote-unquote safety buying that people are rushing into the bond market and all of that. So the rise in the equity markets is going to hit a wall at some point, other than possibly with just outright helicopter money coming and elevating stuff. And it could be an interesting, September, October time frame, because we've moved a lot and there really is nothing underpinning the general equity markets move. I think that's going to change people's perspectives when all of a sudden it becomes really, really difficult for the powers that be to continue on with this inflating of financial assets to the point where it should spill over into generalized inflation. And I think we're going to see that at some point. So we'll see. We definitely have a lot of or at least, some 10 some odd percent of the minority opinion amongst these central bankers starting to come out and basically trying to cover their butts. From Alan Greenspan all the way down, there's a minority cadre of these guys that are saying in so many words that we've screwed up. The wealth effect doesn't work. It doesn't spill over to building the economy. All it does is concentrate wealth at the top. And this whole bubble cycle of this Keynesian model of trying to fix previous busted bubbles by blowing new ones is now at a level where, because of the amount of debt that central banks have on their balance sheets and sovereign governments have, and the insolvency problems remaining in troubled banks, particularly in European banks, but it's everywhere. Chinese debt problems, on and on. This whole dead edifice is no longer able to be saved by blowing bigger debt bubbles. And we're in the end game, and this is a question of when or how we get out of this whole quagmire that we're in. And I think we're still in that whole slow burn thesis along the lines of what Catherine Austin Fitts has described. So, people are waking up to precious metals and seeing it as a bona fide safe haven. Even the fact that we're able to, despite cartel attacking this week, and despite the dollar moving up, still see some relative stability and a quick recovery from the attacking that we saw earlier in the week, particularly yesterday. That's telling. It's the market showing that there's a lot more people that are interested in buying precious metals, and I don't think that's going to change. So, Dave, you wrote a really interesting article earlier this week about tokum and what's going on in Japan. Let's talk about that a bit. Tokum is going to be doing physical deliveries of precious metals, of gold, and
they're right. They're rolling out a physical gold trading platform. So it's gonna be, again, I'm just talking broadly speaking, sort of conceptually. I'm assuming it's going to be the same type of physical settlement that you see on the Shanghai Gold Exchange. And then they also have their Tocom futures contracts, which are, again, sort of the Japanese equivalent of COMEX contracts, but they're putting in a physical delivery option into those contracts. So it's basically, it looks like they're converting the Tocom from a futures exchange into a physical trading exchange. And that in and of itself is extremely interesting to me, especially when you consider that they made that comment about they're going to do helicopter money, and then,
right,
interestingly, a couple days later they retract it. So I think they're kind of pivoting towards China and towards the East and away from the U.S., but they have to be careful about how they do it, and they kind of have to sort of play both sides. But what makes the TOCOM event even more interesting is the fact that, and I don't remember the name of the company, there was a Japanese company that bought out Metalor, which is one of the world's leading precious metals refining and products manufacturing companies based out of Switzerland. They're all over the world, but they're based out of Switzerland. That's where it was founded. And then last year, I think it was March of 2015, Asahi closed on its purchase of Johnson Matthey's precious metals refining business. So, I mean, to me, it's just sort of a slow, methodical move in Japan into precious metals, which I find interesting because it kind of flies in the face of what the U.S. is trying to do to the precious metals market, which is, kill it.
Yeah, and in positioning themselves to be able to deal with the physical precious metals and possibly have that buttress their currency at some future date after this helicopter money experiment goes wrong. 2, 3, 4 years out, who knows? I mean, maybe that's part of what's going on, and you're signaling that it could be a change in their perspective when it comes to how they're looking at their longer-term policy, even their geopolitics, and a pivot towards Asia and the importance of gold when it comes to what China is doing and all of that. So there's definitely something here. There's smoke here. Yeah, it's a story that needs to be watched on an ongoing basis, because I think you're onto something here.
Well, I mean, again, obviously, historically they've been a U.S. lapdog country. The U.S., I guess, promised to protect them militarily after World War II, blah, blah, blah. But, I mean, you have to be an absolute idiot to look at the United States and not say to yourself, there's going to be either a massive debt default there at all levels, government, corporate, private citizen, or they're going to have to hyperinflate their currency like has never been seen in history, which means the dollar is eventually going to collapse. And, if you're looking at that and you're tied to the U.S., you got to sever those ties. And obviously you don't cut the cord all at once. You got to do it in a slow, methodical way. And so I think that could be what we're seeing with Japan. And maybe just to kind of add to that a little bit, just to circle back to your point about Japan sort of maybe bolstering their currency with precious metals. I mean, I think, another section of wall that has writing on it that's there for everyone to read is that, at some point it looks like the Eastern Hemisphere Consortium is going to probably have some sort of precious metals-based currency that'll be, a common trading currency. And so to the extent that Japan wants to pivot away from the U.S. and into that, they're going to have to do the same thing, right, with precious metals.
Yeah. Well, for the time being, helicopter money is the name of the game, and the yen keeps depreciating against the dollar, and that's their goal. And so these are definitely longer-term options that they can pull off the shelf as they position geopolitically and monetarily and pivot more towards China vis-a-vis United States and that bloc. They're hedging.
Well, and again, let's look at this. Is the yen really depreciating against the U.S. dollar? I mean, versus where it was right before versus where it was in 2007, it went up against the dollar quite a bit. I mean, it dropped from 123 down to 76, and then since 2012, it popped back up to 124. But now it's lost 18 points since May 1st. So, I mean, that's a big drop for a currency, or actually it's the yen appreciating against the dollar, right? So it's appreciated 14.5% versus the dollar. And I almost am wondering if that helicopter thing was Bernanke over there on behalf of the U.S. trying to convince them to do helicopter money. So they say, yeah, we'll do it. We're going to do $100 billion equivalent in yen. And look what happened after that. That's what catapulted the stock market up to a record high. And they hit gold. What's ironic about that is if a big country announces a helicopter money, you would think that the stocks would get hit, right? And gold would fly, but just the opposite happened.
Right.
And then 2 days later, Kuroda says, no, we're not doing helicopter money and right now, and we might, and it may not be coming at all, period. You know, and then that's when the U.S. stock market sold off. Of course, they buttressed the sell-off and pushed it higher into the close, and gold flew. I mean, you would think that if a company says, no, we're gonna strengthen our currency, you would think that it would be bad for gold, right? So, I mean, it's just how insane our markets have become because of the manipulation. I mean, they've squeezed any kind of reliable semblance of price discovery completely out of the markets. And there isn't anything out there that reflects the true underlying value of what it represents. You know, stocks, precious metals, whatever. I mean, precious metals are insanely undervalued in relationship to the political and economic fundamentals of the entire globe, especially the United States. So I guess, you know, maybe just to sort of cap that off with the Japan discussion, I wouldn't be surprised to see the yen kind of take a long-term path of appreciation against the dollar, you know, and at some point we may see the yen go below 100 again, like it did between 2008 and 2012. Just to kind of circle back to my point about buying the dips on the mining stocks, whether you own them or whether you're looking to get into them. You know, today's a good example. I mean, we wake up, gold's down about $8 or $9. Of course, the S&P futures aren't down; they're up. And that's despite some bad corporate earnings released that were turned into okay earnings with extreme accounting manipulation. But and the Huey immediately dropped 4 points at the open, 3.5 points, and since we've been on this conversation, the Huey's turned green on the day. You know, it's not up a lot, but it's green on the day, and that's with gold down, gold futures anyway, down over $7. So to me, the stocks are saying, and I wrote a blog piece yesterday where I said I think this current sell-off could be over. I mean, it's going to be choppy, but I think it's over. And I think the stocks are telling us with the Huey being green and a lot of these juniors that I track being green, I think they're saying, you know, we understand this hit on gold is more manipulated than anything. You know, we don't believe it, and we think stocks are undervalued. So I think you're seeing investors, you know, allocate more money into the mining stocks, because what better way to make a leveraged play on the an upside view on gold and silver.
Yeah, and there's also longer-term perspectives of the people buying the mining shares versus the folks on comics. You know, they're gunning for shorter-term trades. So when the bigger monies that are flowing into the precious metals market are occurring, you see it in the mining shares, and that sets the tone for the entire industry, and in fact is telegraphing where we will be in the months ahead. So the comics traders and all of the shorter-term speculators will be happily pushing up precious metals at some higher price at some future date. But it's going to be a given 2 steps forward, 1 step back, and various other ratios that we see, and that's where we've been. But all told, you know, we're still hanging in there and not having seen any traction to the downside beyond. I mean, silver's bouncing off of 1920, give or take. It's pretty impressive yesterday, and we're still hanging in there. So the buyers are here. They're just opportunistically taking advantage of the manipulation and the pause as well, and that's a good trading action to see. It's healthy.
And for those who don't,
kind of reinforce. Sorry, Doc. Just to kind of quickly reinforce what Eric just said about long-term smart investors moving into the mining shares. I met with the CEO of a mining company back in I want to say November, and he had just gotten back from a trip to New York where he was showing his company to some private capital funds, and he said, he just happened to say to me, and I didn't even solicit the comment, he goes, I was just in New York. There's a lot of really smart money that's starting to pile into the mining shares, and we're seeing a lot of really smart money and types of funds that weren't around in 2008 that are looking at the sector. So,
and what else can money buy? I mean, the Wall Street sect looking around for something that's undervalued. There's nothing that's undervalued for the most part in financial assets other than precious metals. I mean, it really has become that stark. So it won't take much more incremental flows to continue to see this move go higher and higher, and I think that's what we got in store.
And for those who are newer to the sector, Dave's Mining Stock Journal is an excellent resource to get a little bit of exposure to help you make decisions of what mines to look into and do your own research on to consider. So we highly recommend that as well.
Appreciate that, Doc.
And Dave's website is investmentresearchdynamics.com, and you can find his free articles up there as well as both of the newsletters that he's running. He's also running a short sellers journal newsletter. And you publish that how frequently? I forget.
Short Sellers Journal is once a week, and the Mining Stock Journal is bi-weekly. With the Mining Stock Journal, I really try to look for junior mining stock ideas that are not covered by Bay Street, Wall Street, or other newsletters. And it's hard to do, but you can find them. And in fact, I just released the latest issue last night, and the stock that I had in there, Bay Street stopped its coverage of this company about 18 months ago, so there aren't any brokerage firms covering them, and the last subscription newsletter report on it was 2 years ago. I think it was Jay Taylor's newsletter. And when I'm looking, when I was talking to the CEO, I'm looking at this and I'm like, I just can't believe that the stock has remained undercover for so long. I mean, I truly think that this stock has 10-bagger potential. I mean, it's 25-cent stock, and I think it has 10-bagger potential here. In fact, I think it's probably going to get acquired before it ever reaches its full intrinsic value potential. So, and I know that they've got two large cap mining companies this week and next week making their third site visit to the company. And that doesn't mean the company's going to sell out to them here, but I think they're, one of these two companies will probably end up making a strategic investment into the stock.
All right, well, we'll include a link to that, the Metals and Markets post, Dave, and for those who haven't checked it out, we're not talking $20,000 a year subscription like some of the infamous subscription newsletters out there in the alternative sector. I think yours is what, like $20 a month?
It's $20 a month. If you subscribe to both, you get a $10 a month discount on one of them, so $30 for both.
All right. So
and I've been told by many subscribers I could charge more, but I don't want to do that. I'd rather try and get the good ideas in as many people's hands as possible, because these are stocks that are going to some of them will create lifestyle changing events when they go up.
All right. Fund manager Dave Kranzler out of Denver, thanks for joining us today. We'll wrap up this week's SD Weekly Metals and Markets. For the Doc and Eric Dubin, thanks for tuning in.